Hey, good afternoon, traders. This is Trader Tim from over at eminimind.com, and we're doing take two of a trade recap video here. Today is the 1st of April, 2021, and the first video had some audio issues, so we're doing it over. If we start on the daily chart of the ES, we have a large extension that can be seen on the weekly chart, and then we also have a daily, just a traditional low to high over about the last month or so, and that 38.47, 50% has a target along with the extension. They're essentially identical up here at 40.30, we'll just call it. And so, we're extremely close to reaching that point, and we can do a couple of things. When we hit that target, we could either get an extended move where sort of an exhaustive move where there's a whole bunch of more FOMO and chasing that goes on, and we shoot up really fast to at which point we would then turn around and come down really fast, something maybe to the effect of the next 50% retracement long. If we do go higher, then this 50% that I'm drawing up here, sort of the next potential 50%, would put us somewhere around lining up with prior highs, and that would be a great opportunity for another long potential support level. And so that's one scenario. That we get to the target and then we just keep going, and we kind of go up in this fashion of gap up and then go, and then the next day gap up and go. The other scenario is we can kind of move sideways at this level and over time, work our way towards this uptrend line, and perhaps even a little bit of a pullback. It wouldn't take much to get us back to this uptrend line, but the key, you have to ask yourself, when would the uptrend be over? Really, it would be when we take out the swing low. So if we took out this swing low here on the ES, I would get concerned and I would look at shorting the first retracement short, and that would essentially line up with the presumably line up with the underside of the trend line or somewhere around that area. And so with that being our bigger picture, let's jump into the intraday here. Now, the last couple of weeks, well, 2 weeks ago I didn't trade. It was futures rollover week. Last week I found to be very challenging, and so I didn't take very many trades. Um, and then really it was the start of the month. Had a couple of the first week of the month was really, really good. A couple of big runners. The second week I only had 3 trades, but one was a nice runner. And so the middle of the month here has been pretty blah. So it was really nice to see yesterday things really turn a corner and the ES really got a lot cleaner. So let's take a look at yesterday first, and then we'll come back to today. And just by the tone of the morning, things were looking much, much better than they were today. So if I back up here on my tick chart, let's get over to yesterday morning. Oh, there it was. Right here. Oh, I go back. There we go. So Wednesday morning, we started the day a little bit of a gap up, and then we were quickly into highs, new high, or excuse me, we gapped up and we were quickly outside of the prior day's range. So that's a really good sign. Anytime we get outside, or whether it's above or below the prior day's range, that will lead us to better trading opportunities. We're either going to gap and go, or if we're outside the prior day's range, that gives us more room to move back to the prior day's close and fill that gap. Either way, the movement is what we're looking for. So yesterday morning, nice, clean, perfect, beautiful 50% retracement right off the open, that halfway back of the day. Let me flip my chart to link them up so we can see that on the tick chart. So essentially what I'm doing here, I'm looking at the 5-minute chart to identify potential support and resistance levels. And then when I see support or resistance take effect, then I shift over to the 512 tick chart to place my trade. So we traded at the 50% nice and cleanly. We came up. This was the swing high I was looking for us to break, and so we broke that swing high right over here and just drew up the low to high, pulled back to the 50% on the 512, and that's where I put my order. So 64.50 was the long entry. I drew up the next retracement, got a first target hit pretty quickly, the 3-point first target, and moved my stop to break even. Drew up the next retracement, put my stop below the 61.8, and then from there, that move was pretty quick, and we didn't have much of a pullback before going higher. And so this little dip and then move higher, I move my stop underneath this swing low right here. And then right this section, we made a little bit of a double top. So I moved my stop up underneath this swing low in between that double top, and then that's where I got taken out. Then the second trade was, let's see here, 734. Get rid of this guy. So one thing you'll notice about the 5-minute chart here, we didn't quite make it to the negative 23% target. So it's a good rule of thumb to leave your drawing up until you either break the 618 or complete the negative 23% target. So, going back to our 5-minute chart, let's look for support or resistance model. If we drop the next retracement and we say, okay, well, let's see if there's any support here at 65.50. I'm not placing an order right there. I'm waiting to see if there's support, and then I can place it over in the 512. Well, as we come over here, there wasn't really a lot of support. We broke the 618 pretty cleanly, or like pretty definitively. We did get this little bounce here, but then rolled over and were spent 20 minutes or so just doing a whole lot of nothing. And so not really an entry at that point. What I did do, because we were at the hour mark for the day, I did go ahead and draw up the full halfway back, low to high. I left the initial retracement up, the first one, because we still didn't complete to the target, but I did go ahead and draw the low to high. We came 2 ticks away from that 50%, and anything within a point I consider close enough, and I start looking for signs of a trend change. And so, what I like to do when we get close to a 50, but we don't touch it, is draw up the opposite setup. So this was a 50% retracement long, and so what I want to do is draw up the 50% short and wait for us to break that 618, which we did right here, and then I can place my little micro long drawing, and then use that 50 as my entry. So it was a 66 was the entry. Then this one moved really quickly again. I started, we got the 3-point first target hit right away. I drew up the traditional retracement, and the 61.8 was getting to be pretty far away by the time we're moving up here into the 72, 73 realm. So I just switched to an extension and drew high to high like that because we didn't have any swing low in the middle of that. And you could switch to trailing each candle, but I felt like since we were so close to all-time highs, if I could give it a little bit of wiggle room, maybe we could see another push up. So I chose to trail the extension. It did swing down a little bit here and then turn a little bit higher. So then this swing low is where I move my stop up to next. So it was down here below the 618, 2 ticks below the 618 there. And then once we made a new high, we pulled back, made another new high. So this was what the next retracement looked like. I had brought it up here to 50 when we were trading down in this area when we pulled back. And then once we made this new high up here, I just brought it up underneath the swing low, at which point we were taken out over here. So that was the second trade I had. And then we just kind of continued that the rest of the rest of the day really. Another how was it drawn, like going like this to here, another 50% touch. So really really a nice change of pace because the last couple of weeks have been a little bit lackluster to say the least. So then we get into today, and this morning, first 30 minutes were kind of a snooze fest. We gapped up and we just kind of sat in this sort of tight range here. This was the entire first 30-minute range right here. There really was not much to do. Whenever you have so you could start the day by drawing a low to high, retracement long, that breaks. And then if you draw the other direction, high to low, when that breaks, it's 618. You really do want to draw a box around that high to low and say, okay, this is a no trade zone. So we got to wait till we break out of that area. And so the long entry was right here. And so let's rewind a little bit and I'll talk about how I got to that point. So this is first 30 minutes. There were a little bit of sign as far as this first retracement here getting a completion to its target. Then the next one, it's not very clear down here, but by the time we get to this second one, we break above the top of the first 30-minute range, and we're now in basically new high territory. We don't have any resistance to the left. And so seeing this retracement complete to its target, because at this point, you're not sure, are we going to trade at the halfway back short and come back into the first 30-minute range and just be range bound? So that's why I didn't take the 91. I let that one kind of be the confirming retracement, and then I just took this one. Low to high, pulled back to the 50. It was a 92.50 long, and unfortunately this guy got a first target, drew up the next retracement. I put my stop below the 618, and I was taken out right on this little spike down. It ended up going a little bit higher, but then even that so I got taken out on that one for a winner, but not. I was expecting things to really catapult higher from there. They did not, but with the seeing what did follow, really would have been pretty difficult to stay in. I mean, you're drawing up your retracement like that to trail your stop. With this dip down here back to almost the full halfway back of the day, something like that. Not really you want to get out close enough to the high price, but not give it, you don't want to give it so much wiggle room that it comes back 10 points on you and you give up all of that gain. And if you're too aggressive, then you get taken out too quickly before it even has a chance to move. So that's why trailing to 618 and then shifting to swing highs and swing lows is a really good approach. So there wasn't really a great retracement here to get in. We just kind of came straight down, then straight back up, and then straight back down again. So that kind of brought us to the end of the morning session and just called it quits from there. So nice to end the month of March and then start the month of April here on a positive note, especially since the last 2 weeks were just so-so, I felt like. So that'll do it for this week, and no trading tomorrow for Good Friday. If you have questions, you can drop them in the comments below. Wish everyone a happy Easter and a great weekend. Thanks, and have a good one.